Hey viewers, welcome back to the latest episode of RHO Market Chat. Robin, so last week we talked about the US financial markets, positive sentiments mainly driven by the Federal Reserve stimulus as well as possible oil deal. You even recommended investors to position themselves in gold. So Robin, 1 week has passed. Please take us through.
Well, it's good to be back again. I remember last week I said that there are two catalysts that drives the market. And one is the expectation of OPEC and Russia cutting oil production by 15 million barrels a day, and that was what Donald Trump tweeted. Well, clearly, last week I said that this could disappoint because the combined daily production of the Russians and the OPEC is round about 25 million barrels a day. Well, before I came into this session, just received news that the cut was 9.6 billion. Well, OPEC and Russians, they agreed on a cut of 9.6 million barrels a day. The oil prices went up like 2%, but it has since given up all its gain. So clearly the market disappointed. And what I could see from the Dow futures is that the Dow future is currently down to about 300 points. So last week, oil was a catalyst, and the monetary stimulus, fiscal stimulus coming out from the Fed was also the other was also the other catalyst. So last week I said, there's only one safe place to go, and that is gold. So let's look at recap and look at the gold chart. So last week I showed you the gold chart, and I said that gold, with all the money printing and monetary stimulus, fiscal stimulus, could be a catalyst that will drive gold prices up. Well, last week on the 6th of April, we talked about gold, and gold was then trading at 1634. And just about when I was leaving my trading room to come here, gold was traded at 1690. So it has gone up almost $60 since we have spoke about it. But that's not the end of gold. All right, I expect gold to take out, this is spot gold price, by the way. So I expect the spot gold price to retest this year's high, which is the March high at 1702. And when it breaks 1702, it could go to 1725. So it is a very near-term target. I would expect in 1 or 2 months' time, gold to hit 1796. So that is a slightly longer term target. So that's the recap for last week.
Robin, last week we saw a significant rebound on Wall Street. The question now is, have we entered the bull market?
Well, last week the Dow Jones staged its fastest rebound since 1974, and the rebound was the fastest both in speed and magnitude. It rebounded 32% from the March low, and many chartists is now calling a bull market. Is the Dow entering a bull market? Is the bear market now over? Well, I have a very interesting picture of Titanic before it sunk. And you could see that before Titanic sunk, it actually lifted up itself before it was completely submerged. Well, I think you know what I'm driving at. Are we really at the start of a bull market? Well, we saw the unemployment figure adding up in the last 3 weeks to almost 16 million in the US. And we saw staggering numbers of death and daily new cases. Then why is the Wall Street indices been moving higher? Well, rebounding 32% from the bottom. Well, Wall Street celebrated the earliest sign of a fall in new cases, and that you could see from the flattening of the curve. Well, on the average, it has been, the number of new cases has averaged like 6,000, and last week we saw the curve flattening, and we had like new cases coming up to only reducing to about 5,000, and that caused some optimism on Wall Street. And the same could be said of Europe. We could see cases in Italy, France, Germany, and Switzerland flattening out. Well, as the market improves with the reduced number of daily cases, but what happens in the unlikely case where infection rate do not improve by the end of April as expected, or even worse by the end of this quarter? First, the stock market and the credit market, I believe, will retest recent low, and worse, at that point there will be growing concern for people to return to work, because at a certain point the negative impact on the economy and the people's general livelihood becomes a bigger negative than the disease itself. Well, I hope that doesn't happen, but if that really happens, let's look at my trade plans on the Dow Jones. So this is my trade plan on Dow Jones, and last week on Thursday, all right, just before the Good Friday, Dow Jones hit one of my significant resistance level at 23,800. Well, that level is particularly significant for me on my trade plan, and you could see these lines here that I've drawn are very significant resistance and support level. And by hitting 23,800, I would expect the Dow, all right, to have a short-term pullback, even if it is a bull market. All right, so look at these levels. These are my key levels. If you are a trader, well, I hope this is helpful for you. But you know, I also want to share with you my trade plan on S&P. So S&P hit my very significant target at 2802, and after hitting 2802, I'm expecting a very sharp pullback to 2675 and 2640. So let's watch whether in the near term, maybe in 1 or 2 weeks time, that we could see S&P pulling back to 2640 to 2675 region. All right, so that's all I have for my charts.
Hey viewers, that's all we have for this week's RHO Market Chat. If you like our content, please subscribe. We'll see you next week.